Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. So let's keep this one sweet and to the point. Bonds sold off a little bit, nothing special. Dollar is a little bit up, also nothing special. And oil prices are pretty much flat. But of course, the big story is, stock market made new all-time highs very recently. But now Bitcoin has crossed the maximum that I've seen. It was $123,000, and Ethereum also crossed the $3,000 at the time of this recording. Ethereum is a little bit below 3,000, and Bitcoin's around 119,000. And I still see a lot of people bearish, which is good. That's what you want to see. Retail is not here. You can see that by viewership of main YouTube channels. You can see that on Google Trends. It's still nowhere near euphoria. It's mostly driven at the moment by institutional money and some big whales, but not retail still doesn't believe it. For you to have an idea, so Bitcoin correlates very, very well with liquidity, with global M2. Everybody's aware of it. And I want to say something very important, and I hope you keep this in mind. There's going to be a time where this two will decorrelate long enough, both on the upside. So when we have the euphoria phase, Bitcoin will decorrelate a little bit on the upside, meaning it will overshoot it. So the trend will be up on both, but Bitcoin will get well ahead of itself. And on the and then you're going to see the correction that's going to lead into the bear market where it's going to undershoot it. Why am I saying this? Because you're going to have smart asses immediately saying, oh, it's not correlating. You see, this is completely bogus. This was all stories and retroactive strategy. No, it's always like this in every cycle. But the issue is, the vast majority of time, it correlates almost perfectly. And then both on the upside and the extreme downside. So basically on the extremes, it decouples a little bit from the global M2. So global M2 will probably be kind of flattish, going a little bit down, and Bitcoin will undershoot it quite a lot during particularly the worst parts of the bear market. Same thing on the upside. Global M2 will be coming up, and Bitcoin will kind of overshoot it like this, in my view. So, and this has happened before, but I'm already telling you, because people are so focused on that chart at the moment, they miss the details, and as people say, the devil is in the details. They will miss the very little details of this undershooting, overshooting. Now, when it comes to altcoins, and Ethereum is the leader on this front in terms of value and all of that, we really need the business cycle to pick up. So we saw ISM at 49, better than expected last month, but we really need to see it going into the 50s, mid 50s, and not just like 50.5. You need to see it going into 54, 55, 53, 56, 50, something more robust. Usually when ISM peaks, usually above 60, so that's how far away we are at the moment. We overshoot it around to 60 or so, and then it's pretty much nothing but down from there. We are not even above 50, so we are very, very far away. So you can start to make the argument, I wouldn't put past it, that this cycle will extend longer, depending on how quickly you get these numbers to adjust. Maybe, who knows? You have a bear market that instead of lasting 12 months, it lasts, let's call it 6, 7. And instead of dropping 75%, it drops 45 to 55. Very possible. Very possible. That's why I'm planning also to leave around 15 to 20% left in crypto after the big euphoria phase, just in case the euphoria phase lasts longer than I expect, because it will be impossible to pick the top. And also for the case that the cycle, for example, let's say that the bear market this time is much more subdued and it only goes down 25%, 30%, 40%, I mean, who knows? right? So it's also good to in my views, it's just my personal opinion, to always leave something on the table in case you're wrong. So basically, you're mitigating the risk that you are wrong and that you are early in your assessment of the end of the cycle. So that's very important as well. But the business cycle really needs to pick up. Hopefully, with the big beautiful bill and others, things will get better. And on that, I have to say something which is important. We've all seen this big beautiful bill will add extra $2.8 trillion to the deficit, or $3 trillion to the deficit over the next 10 years. So on average, $300 billion a year. So this is the thing that has created all the tumultuous chaos on social media and that makes people go crazy. Now this is the important part, because this is, you see, you're not informed because the point is not to inform you anymore. It's to deliver you propaganda on this side versus propaganda on that side. That's all it is. So does the bill have the potential to really blow up the deficits like that? Probably it's overstated, just because the CBO tends to overstate these kind of things and to underestimate the tax revenue that is actually collected. So this has happened in the Trump. So during Trump's first term, the CBO underestimated the revenues from the tax after the tax cuts. And then during the Inflation Reduction Act by Biden, so the IRA, it underestimated the costs of the program. So the program actually had much bigger deficits than what was initially done. So in this case, I wouldn't put past me that this is being overstated deficits and understated tax revenue. Why? Because the CBO just messed it up very recently. But very important, remember that number. Let's say it's $3 trillion on over 10 years. So that's 300 billion. Remember that number, 300 billion. The problem with the CBO is that it does not capture tariff revenue. And tariff revenue, it's on pace to do 300 billion in year one already. So in the first year of Trump, the tariff revenue is expected, or at least is on pace, if the following months continue like it is, to make close to 300 billion this year. Well, but that cancels out the deficit, the extra supposed deficit. Why isn't that analysis presented to you? Because, as I just said, the idea is not to inform you, is to confuse you, is to make you against somebody else. That's the point. It's forget the media no longer informs you, because that's not the purpose of it. That's not what it sells. That's not. It's pure propaganda machines nowadays. So, but the thing is, from an investment perspective, so if you forget about real economy and stuff like that, from an investment perspective, actually, the more deficits, the better. Why? At least as long as there's some level of control. I'm not saying that 80% deficits, 80% of GDP deficits is a good thing. What I'm saying is a 5-6% of GDP deficit is better because you increase liquidity. So basically you devalue the currency, which means if you hold crypto like me or if you have real estate like me, your assets go up in price. So from an investment perspective, it's actually good that the deficit, basically it's good. I know that this sounds very weird, but it's the reality. It's good that Trump fails with the tariff revenue balancing out potential extra costs from the bill. I mean, just look what happened in June. In June of 2025, the monthly budget, the Treasury has reported the first surplus in 20 years. Usually it's deficits. People say, why is this surplus? What does that word mean, surplus? That means the US government collected more money than what it spent for the first time since 2005. You have to go back 2005 to see the last time that this has happened. That's how rare it is. Mostly driven by the tariff revenue. That's my point. People are not paying attention to all the moving parts. But what did I say? Deficits increases. So there's two ways to increase liquidity. Sometimes they work together, sometimes they work apart. Central banks and QE on this side. So central banks lowers the rates, prints money to buy bonds, and keep the rates suppressed. That increases liquidity in the system. Option number 2, the Treasury runs big deficits because it has to issue more and more debt. What is debt? Debt is future currency, right? It's currency paid in the future to you. So you're creating more currency if you have more debt. So you have more liquidity. Sometimes both of them work together. In this case, the way we are today is the Fed is not doing much and the fiscal is doing all of it. So the idea is, I think, and Besant, with his background, he should know this, if you pull the liquidity from the deficits here, you push the liquidity on the central banks over here. Because remember what I told you, the problem is the same for Democrats, Republicans, Tories, Labour Party, Le Pen, Macron. Doesn't matter. There's too much public and private debt in the system. Austerity, meaning raising taxes and cutting a lot of costs, no longer works. We have to grow our way out of it. So you have to have liquidity going up, so assets don't fall in price too much, so the collateral doesn't fall in price too much, so debts don't fall too much, so banks don't go bankrupt, so you get the drill, right? But it's important that you pay attention to this, because for the real economy, a budget surplus is better. For the financial economy, is worse because you're removing liquidity out of the system, or you're potentially not issuing as much debt, and you probably will lose the surplus to pay off debt, which removes liquidity out of the system. For the real economy is great, for the financial economy is not great. As I've told you before, you have two economies. You have the financial economy, the stocks, real estate, crypto, and then you have the real economy, people going to work, paying less taxes, getting a salary, repaying some of the debt, so there's less money spent in interest and other stuff. That's all good for the population, it's not good for the financial side, because they are completely separate things. But of course, if the Fed, if with this side here getting better, the Fed should be able to push forward, but you have to wait until 2026, because Powell will probably be in 2045 and is still waiting for the inflation of the tariffs. But that's a case for a different story. Now, in terms of crypto, I think the way is up. I've told you this before. I think the way is up. Does that mean we'll not have any sideways movement? No. Does it mean that we'll have no sell-offs? No. Does it mean that we'll have no big 5, 6, 7% correction? No. Those are normal. Those are part of the time that when you're in crypto that you see all the time. There's nothing special about it. There's never been anything special about it. It is the price you pay to be in the best performing asset class in the history of mankind. That's all. And what you want to see is every time you have a sell-off, that the Peter Schiffs and the great Martys and all these people start celebrating that the top is in and everything is finished. That's what you want to see. And you want to see a lot of people concerned and making comparisons between Bitcoin 2013 and 2025, and now it's about to go down 90%. All of this, it's important because it's good. That means there's a lot of suspicion on the market. There's a lot of non-believers. They can get flushed out. They can put a lot of short positions and then be part of those Watcher Gurus updates saying $205 billion of short positions being liquidated in the last 24 hours. So you need those people. The time to be concerned is when Bitcoin has like a 10% drop and nobody cares. And people are celebrating and like everyone's celebrating, oh, a deep opportunity, let's go, let's pile in, I piled in with leverage, let's go. I mean, there's no meaningful leverage in the system at the moment. Actually, the biggest shorts of all time on Ethereum were just opened over the weekend. So the shorts are going all in, trying to stop the rally. If they fail, they just compounded an already big mistake or already big problem with the amount of net short position that was already in Ethereum. So it just make everything worse for them. So, but they just got all in, just gone like completely crazy. It's the amount of contracts on the short side is crazy on Ethereum, and the price still keeps moving up. That's all things that are not yet, blow off top or anything like that. That's when you see all the leverages are long. It's max leverage long positions. Probably people are calling in for $1 million Bitcoin imminent and the flip of gold. All this kind of stuff. We are far away from it. As I've said, retail mostly is not here yet. But it's important that now it's the time, I've said this in my previous video, sit down and reflect. Okay, I listen to a lot of people. I saw a lot of people making predictions and talking a lot of things. What Crypto Banter does, or Meet Kevin, is they sell both sides. So one video, if you catch it on a Monday, is a bullish video. On Tuesday is a bearish video. And it's either Bitcoin's going to go to 40K or Bitcoin's going to go to 250K. So you have the range. So then you can delete the one that was wrong and say, haha, you see that? That's the idea. But I'm talking about like people seriously taking one side or the other. So listen to what people have told you. Remember, think about what people told you and the impact that it had on you. And think, was this person remotely correct? Was this person at least right on the movement? Maybe not on this week it went down and that week it... No, but just like the overall movement of the market. Or were they on the opposite side? And you have to be careful, very careful, because being bearish in a bull market, it's the most... So basically when is the most punishing, penalizing, destructive behavior you can have in crypto besides trading with 50x leverage and all this crap. Because you miss the move. You miss the whole thing. And then your brain will tell you to catch up using leverage and then you miss whatever you have left. That's the problem. Because when you're bearish in crypto, you better make sure that you're really picking the top or close to it, or you're going to look like a buffoon in very short order. This is why these people delete their posts and their videos. But that's why you have to remember, because you have to learn. You have limited time and you have limited attention span. And you have to dedicate it to people who actually help you think about it and why we are moving in certain directions, versus the people that want to scare you or they just don't know what they're talking about, which is most of them, and then keep on making predictions after predictions, just to, and the more bombastic possible, to basically capture your attention. So you have to make that judgment. You have to be selective. Should I just listen to this guy for comedic purposes? Maybe. Yeah, I also have those. I still listen to Peter Schiff to laugh a little bit. So now his big thing is that, Bitcoin has not made a new all-time high in euros and Swiss francs. Okay. And when it makes it? It's only... I already know what he's going to say this. Bitcoin's already risen so much, there's very limited upside potential. You should be buying my funds. This is what he's going to say. Problem is, he's been saying that about Bitcoin since it was $200. So, with that, guys, don't forget. Thank you very much for your support. Don't forget to like and subscribe. Tomorrow is Inflation Day. Let's see how it goes. And I'll catch you in the next one.